What's up, military millionaires? I'm your host, David Pere, and I'm here with my lovely co-host, Alexander Felice, and Mr. Bill Militello, who I'm sure a lot of you know from, he spoke at Veterans REI Live last year, and he's obviously been around the military community, but Bill is the founder and CEO of LocalVest, as well as a Marine Corps veteran, and he's done just a ton in the real estate, private money, venture capital world. And yeah, I've gotten to hear him speak once or twice, and just phenomenal wealth of information. So this is gonna be a really good show as we kind of dig into, raising money and some of the fun things that go into that side of the real estate realm that everybody always has questions about because everybody always wants more money. Welcome to the Military Millionaire Podcast, where we teach service members, veterans, and their families how to build wealth through personal finance, entrepreneurship, and real estate investing. I'm your host, David Pere, and together with my co-host, Alex Felice, we're here to be your no BS guides along the most important mission you'll ever embark on, your finances.
Vehicle 1, you're clear to depart friendly lines.
Roger, Vic 1, Oscar Mike. So, Bill,
it's funny how that is.
Show. I know. Welcome to the show, brother.
Hey, thanks so much. I appreciate it, David, Alex. It's a real honor. Appreciate you having me on.
Yeah. Why don't you share with the guests just a little bit more detail about your background than what I just waved off?
Well, as you said, I think the most important part was Marine Corps veteran, right? And after that, got out of the Marine Corps in 1997. And as I'd like to share with people, there was really not a lot of transition assistance back then. I think we took a course and the guys at the front of the room, and I was like, we're going to interview for being undertakers or whatever. So it was a tough time transitioning. And my wife affectionately refers to it as the flaming reentry. And so, that's, I started, trying to tread water right off the bat. Kind of the head went underwater a few times with, trying to be an entrepreneur. But basically, that was it. After a short stint on Wall Street, and 9/11 happened, and went to work as a consultant to the Securities and Exchange Commission as a port in the storm. Thought I was going to go back to Wall Street. That didn't happen. And in January of 2003, hung out a shingle with my first company. So started 4 businesses, sold 2, all in financial services, all in, private investments, doing deals, real estate, venture capital, et cetera. And as you said, now I'm the CEO and founder of LocalVest, which is really built for the purpose of helping military veteran entrepreneurs and real estate operators connect with capital quickly, easily, and inexpensive.
I need that.
Yeah, man. Yeah. So
I'm so glad you're here.
Cool. Yeah. Well, we're a little far apart, and my checkbook is in the other room. So, but in all seriousness, I my whole focus has been financial services. I wanted to go in from the time I could remember, but I also wanted to serve my country, and so I knew that being in the military is a young man's game. And I was going to front load that and then move on and, kind of earn the benefits that our country provides with our, free market system. And so along the way, I don't know, I guess my stats, if I was a baseball player, we've bought about $485 million worth of commercial real estate, invested in over 50 companies, primarily technology companies, over 100 transactions, and led Series Seed rounds, Series A rounds, et cetera, and, trying to take that capital raising syndication experience, regulatory experience, and bring it to bear to help military veterans.
Wow.
Do it right? Because there's a lot of ways to do it wrong, and I see it done wrong every day. But really keeping them from stepping on it, if you know what I mean.
That's a double threat, Bill, because for syndicators, they need both help with the syndication and the capital. So.
Yeah, it's a process, right? Alex, thanks so much for saying that, because I think a lot of people miss that syndication is actually a process, and there's rules and that you've got to follow. And you've got to have knowledge. It's a profession to be a syndicator. And then, of course, the money is what everybody's focused on, but you've got to do all the things right in the right order, and dot the I's and cross the T's, or else you just have you're welcoming bad news into your life, and you don't want to do that.
So I just closed my first syndication that I led actually in December.
Awesome. Congratulations.
And, thank you. And the process for me, not like, doing a single family deal, the process is similar, but it's not the same. So that definitely was the hardest part about, I got to go out to people. I got to ask them for money. I got to get a deal that you know how like you get to do a deal and it's like, you think it's a deal, and then you got to dig and you dig and you dig, and you're basically digging to the last day to make sure that you're doing the right thing.
Right.
So
right.
And then you're like, I have to dig into this deal, but I don't really know the process. And somewhere along there, I have to have enough confidence to know that A, it's a good deal, and B, it's going to close, and then go ask people for money. All while I really don't. The process is complicated. And so,
yes,
like you said, so having understanding how it works in theory, and then being able to navigate the legalities and what's supposed to happen next, and the people you got to know people who are going to give you good advice. So yeah, I mean, those are all really, I don't know if they're underestimated, but people, when they talk about these deals, like you said, they're like, what's the money? And I'm like, that's the easy part. If you got a deal that works, it's like, you still got a mountain of stuff to get through.
Yeah. In some respects, the money is easy, and in some respects it's really hard. I would say that the operator, finding the deal, whether it's a venture-backed company or it's a piece of real estate or it's whatever you're doing, raising money for a fund, finding the deal, if it's a great deal, and believe me, you gotta kiss a lot of frogs to, turn over a lot of stones to find great deals. But when you find a great deal, you can't, and you have the confidence, as you said, to know it's a great deal, and you pull the trigger, right? You're crossing the line of departure. Now you're committed, right? Your deposit goes hard, and you got to go and find the money. I feel like as long as people follow and do the right thing, have good counsel, right? And you always have to have, good advice. Don't try to do it on the cheap. I think that's one of the landmines that so many, veterans step on, is that they feel that they don't want to pay for good advice because it's expensive. And I'm like, no. It's not expensive. Making a mistake is expensive. Paying for good advice is not expensive. But then it's an education, and then So that's, and by the way, I don't do that, right? So I'm not soliciting anybody to, for me to give them advice on syndication. I'm not a securities attorney, but I kind of feel like I'm an honorary JD just because of how many of these fellas and ladies I've employed over time. But, you got a great deal. You're right. The money will find you, but you just got to do it in the right way. I will tell you one more thing, and I'm sorry this sounds, I guess I should take a breath. But one of the things I found is in finding a deal and then going out and getting the money and then closing the deal, is that really works against people. I would highly encourage folks that are listening that are doing syndications to kind of reverse some of the steps, change the steps. What I've done is, and I've not always been in the place to do this, so you understand that this is you got to be a little further along. But if you can, close the deal with your money, okay, or friends that you can borrow the money from. Right? Close the money with your balance sheet, or money that you can borrow from friends or from high net worth individuals. You will get a better deal at purchase because you'll be able to move quickly, right? Moving quickly in real estate or anything else, and certainty of close, because you wave the checkbook and the account statement in front of them and say, hey man, I got the money. You want to do a deal? Or you want to do a deal with the guy down the street who might take 60, 90 days to close. But I want a discount, right? I got certainty of close. I have the funds. We're going to do it. I'm going to get a discount. You do it, and then you syndicate it after you own it, right? And so that's what I've done. And it's you kind of walk in with a built-in gain for your investors.
3 things. Hang on, David. You just wait. 3 things. One, I have a saying. You said earlier about going cheap. Going cheap is the most expensive way.
Yes.
To your point. The second one, I forget. David, go ahead.
Oh, no. I'll let you stumble for a minute. It's all good. So I was just going to say that I am actually really glad to hear you say that. So when we talked on the phone, I mentioned that one of the things when I was a GP on the first syndication, I was not the main guy. And I realized very quickly, like, I don't know if I really want to get into this world. Like the personality side that handles the syndication, like that actual process that was not the enjoyable part of real estate for me at all. Anyway, so I'm looking at a big deal right now that's off market. We've been negotiating back and forth. I've probably been 7-8 hours on the phone with the seller and going back and forth, like, 79 doors, 3 different properties, but all in the same, like 2-mile radius, 1-mile radius. And I was trying to do all this crazy stuff with it to decide if I was going to raise or this or that and the other. And I ultimately just said, you know what? I got 2 buddies. We've got the money. 33% partners. Great. High five. And so it's cool to hear you say that, because you're right. We're going to be able to take one of the properties down in 30 days and the other 2, I think, are going to be 45-day closes. We're getting pretty solid terms. And then if we want to syndicate it afterwards, there's enough meat on the bones and there's a lot of ways to do that. So I don't know if we're going to on this one particularly, but just kind of cool to hear you say that, because that's kind of where I'm at right now. And I hadn't even thought about it from that standpoint where you could syndicate it on the back end. And that actually makes a ton of sense. That's a cool strategy if we wanted to go that way.
Yeah. Well, and congrats on thinking in that direction, because I think when you do go to syndicate it, I've always told people, like, well, I already own it. And so, what greater confidence do I have in this property than I put all my money, all my chips in the middle of the table on it. And so if you don't like it, I'm going to own a lot more of this than I thought. But, that's commitment, and people really people invest on confidence and trust, right? And so they're like, wow, you're confident about this deal. Alex, you were talking about that earlier, right? When do you have that confidence? And so, certainly being able to communicate that to an investor, that you've got the confidence in a deal, because, hey, all your chips are in the middle of the table, and you got a pretty big bet on.
A lot of skin in the game.
A lot of skin. Yeah. I tell you what, that means a lot to me, right? As an investor, because I don't just do my own deals. I write checks in other deals and other veterans deals. And, I look for that, right? I want to see them with skin in the game. It makes sense.
Skin in the game is one of the primary ways that I measure somebody's decision-making. Yeah. I think about it all the time. That also works for our single family listeners. That's what I figured out really early in single family. If I'm trying to buy foreclosures with a loan, it's impossible. Get the cash. And what you do is you separate the buying and the financing transactions. And you can if you're trying to do both of them at the same time, they're both complicated transactions. They muck everything up. If you can separate those two, it's like, dude, buy it. As soon as you close, you can do the syndication and get the money back on the equity side. Easy. Put a loan on it. No problem. But if you can buy cash, now look, I can't go out there and buy. I needed $3 million to close this deal, $3.5 million. I didn't have that. So I don't have that luxury, but in an ideal world, the same would go if I could find somebody that's like, hey, look, they have an account. They want to do the syndications with me. They don't want to put all the money and hold all the money, but they could bridge loan it. Hey, buy it for me. We'll buy it together and then we'll go get the loan. I'll raise the money. No problem. You'll loan me the $3 million, the $3 million for 6 months, and then you'll syndicate out of it. No problem.
Yeah. Listen, you can cut deals like that all day long. Certainly I do. And, you give that person a, market interest rate, and then, you give them once you've fully syndicated the deal, you give them a, free ride in the GP and get them a piece of the carry. And, then, they've made, good interest. It's backed up by real estate, right? So there's collateral there and for that loan. And then, their money's out. And when you pop it or you refi it and you guys get a carried interest out of the general partnership or the manager, their rate of return is infinite. So it's a good deal. If you can put that deal together and show it to the right investor, they'll do the deal with you all day long.
Yeah. I love the way you talk about it, because that's the same way I approach real estate. Well, I don't know if it's the exact same way, but my whole thing is like, look, if you can find a good deal, then you could find somebody else to pay for it, and you can all make money.
Yeah,
So,
listen, and you're absolutely correct. I'm sorry, I didn't want to step on your words, Alex.
No.
Continue.
Oh,
Yeah,
don't-
so
No, I mean-
and it goes beyond real estate, right? Like I've done it in venture, for example. I don't know if people on this call understand venture capital very well, but if you do, here I'll give you an example that once a company passes Series A round, like and they're in a B, real no kidding venture capital firms that are running hundreds of millions of dollars, if not billions of dollars, are stroking checks into B rounds, C rounds, and D rounds. And so if you've got access to a B round or a C round, and you can come in for $100,000 or $200,000 or whatever, just say $100,000, you could borrow that money from syndicate by syndicating. You could basically borrow the money, right? Invest in the round, pay someone a modest interest rate. Now it's going to have a negative carry, so we're talking modest, like 3-4%, and then give them a piece of the pop, because 3-4 years down the road, maybe 5 at the latest, you're talking about B rounds typically are exiting at 4, 6, 8x. I mean, you're talking about wealth creation. I've done that a number of times. It's so you can do the same thing in venture as what we're talking about in real estate.
Yeah, I know real estate, so that's why I started as a single family guy. I had no idea about syndications. It was out of my confidence level to a degree that I was like, okay, that's just not. But you get better at life, right? And so, and I worked in commercial banking underwriting. So to me, the overlap between real estate and business is kind of similar. I happen to know real estate, but the financial transactions are largely the same. I'm sure the nuance of venture capitalism is much different that I don't know, but financing is financing as far as the bank is concerned.
Financing is financing, right? And it's all private money, right? We haven't even talked about going to a bank yet. It's only after you've closed the deal and you're looking for a mortgage to take out that private lender, and then you're syndicating the equity, right? So,
but to your point, when you say, well, in the first part, if it's backed by real estate, then somebody's going to be happy. So everybody likes hard assets as collateral.
Sure. Who doesn't, right? It's 100%.
So talk about the equity side.
You're talking in terms of what? I'm sorry.
Well, you said that's where you had a background in doing private lending.
Yeah, well, whether it's if we're talking about like those venture capital or private equity deals, so you're moving away from real estate and talking about those kinds of deals.
Yeah.
Yeah. So listen, entrepreneurs are entrepreneurs, right? And I've got a soft spot in my heart for entrepreneurs, particularly military veterans. And and the reason is because nobody teaches syndication. Nobody teach, or if they do, I haven't heard it taught well. And it's and raising money is one of the hardest things you can do outside of serving in uniform. And really the success of most entrepreneurs is really their ability to raise capital, and their ability to raise capital is a function of the size of the wallet of their personal network, right? And so that's a really, really tough thing. But if they go out there, right? If they get out there and they expand their personal network and they gain knowledge and they're looking for deals, and it doesn't matter if it's real estate or venture or private equity, but let's just take venture, for example. Take that same example that I used earlier, that, hey, you got a bunch of buddies, some of them are in, running companies or, startups, and you're able to come in on a round, right? $100,000. And you go out and you say, okay, you're going to close in 30 days, 60 days, 90 days. I'd like $100,000 worth of this illiquid speculative stock, right? And he's like, sure. And so, but you've got to have real conviction in the company, right? Real confidence that this company is going to go someplace. And you learn about that company just like you learn about a real estate deal. and you gain confidence about it. You go out and you syndicate, 10,000, 20,000, bite-sized, dollar bite-sized pieces of it. And you say, listen, I'll pay you a modest interest rate because I'm giving you access. Remember, access to the deal. These people don't want to do the homework, right? So your value to the investor is that you're going to go out and do the homework, and you're going to provide access. And then you got to make sure that you're aligned on it, right? Okay, well, their collateral happens to be the stock, and then you're going to provide them a modest interest rate. And then on the upside, this thing pops in a couple of years, they're going to make whatever, another 20, 30, 40, 50% of the deal. But what you're going to make is, the delta, right? You're going to make the 50, 60, 70, 80% of the upside. And you see a 4X on 100 grand, do the math. It ends up being a pretty cool event for you financially.
Yeah. So you say one of the most important things an entrepreneur or a real estate syndicator can do is raise money. But then you say you have to have conviction in the deal. So how do you feel about, how does somebody get good at both raising capital and due diligence / underwriting?
It's tough. I tell you, I don't know if anybody is really good at both. I'm not. I try to surround myself with people whose unique ability is different than my own. Right. So hands down, I love syndication. And so, that's what I do in a partnership. But I trust people who are excellent at finders, right? Or, being able to get the deal. Or then I trust people who are really excellent at diligence and we're really great at operating and, leasing it up, or, just making sure that the thing, runs smoothly. And so I think that, trying to be a one-man army is a mistake. There's just too many hats to wear. So I think it's about, finding people that you can trust, who are highly competent in their areas of expertise, their unique ability, and just surround yourself with people who are great at things that you're not great at.
Hey guys, if you're looking to take your investing, business, life, or just yourself to the next level, then I have something for you. The War Room Real Estate Military Mastermind Group is a mastermind group that meets weekly in small groups of 5 to 6 people to help you hold yourself accountable and really experience that growth. But we also have a monthly guest speaker that we bring in, and we've had guest speakers that talk about mindfulness, taxes. We're bringing in somebody to talk about marketing. We bring in very specific topics that will adhere to very broad, any kind of real estate investing or entrepreneurship that you want to do, and will really help you out. And we let you ask these speakers questions and get very personal with them. And then back to the small groups, weekly accountability for what you're trying to achieve, and just being surrounded by like-minded people. And they say your network is your net worth. I know that's an overused phrase, but I recommend that you check it out. So just shoot an email to wrmastermind@gmail.com. Once again, that's wrmastermind@gmail.com, and we'll send you some more information.
But know what you're great at, because everybody's great at something. I'm not blowing sunshine up people's skirt, but everybody is great at something. You just got to know what that is. And then just do that and outsource everything else.
That's why most syndicators are teams, right?
Yeah. Yeah. I mean, I can't do it all. There's no way. And, I've been really lucky. Well, I found my way to be lucky, right? Because I can tell you the 10,000 ways not to do it, because I've certainly had, I've had my failures and my bumps and bruises and things like that. And so it's really through, 20 plus years of experience of meeting some of the bad guys and surviving those things that I know a good guy and somebody who's really competent and honest, has that integrity and is hardworking. And of course, I don't need to even say it to this audience. That's why I'm just doing business with veterans, because they've got the intelligence, integrity, and grit that is necessary. And, you can't necessarily screen for those subjective qualities, otherwise. And the best way to do it, in my opinion, is just to work with, to work primarily with veterans.
Yeah, that's actually a pretty good filter for what you're looking for. That's really interesting.
Agree.
So my first 24 unit, I didn't bring on any partners, and I made a lot of mistakes. And in some ways, that was good for me. And the second one of the first things I did when I got in trouble was just I call people, call and ask for help, give up part of the deal, call and ask, because having people around that know what they're doing is so much more valuable. The other thing kind of hit me at the time was like life it's a long game. And so people get greedy about, hey, I want to have all of this one deal. And it's like, yeah, you're not going to make as much. You could have given up some of your deal and had a better deal. And then also you now have to split that with your investors. So bringing on people, it kind of like you said earlier, like advice is cheap. Expensive advice is cheap. Going cheap is really expensive.
Is it expensive? Yes.
Yeah.
I love a lot. I love that. And I love the fact that, I meet I almost in like within minutes know whether I want to like continue to have a conversation with a veteran even, but let's say most people, and, they've got this one idea, they've got this one project, or they've got this one company, they've got this one real estate deal. And it is like, they've got their arms wrapped around it, and it's, mine. And you're like, I can't help you, man, because, you're going to have to share it with a number of very competent people to bring them to the table. And yeah, they'll give you 30 minutes of their time for free to help you because they're good people. But it's people who have that real, I would say, messed up mindset, that scarcity mindset and I loved it how you corrected Alex earlier about the $3+ million. It's like, yeah, you don't have it yet. You have it. You just don't have it yet. Yeah. And you will. And
You're
so,
welcome, Alex.
Yeah.
It doesn't matter, because once I have the 3 million, I'll want to spend 15.
Of course, it always works that way, man.
Yeah, right.
Of course it works that way. Yeah, listen, and if you're not, when you get to the top of a mountain, and we all like to climb mountains, you're going to see higher mountains that you're going to want to climb, right? And it's I'm working on that. It's so funny that you should mention that topic, because I feel like if there's anything I'm working on in meditation, is this. I don't know if it's a disorder or disease, or it's just a personality, thing, but the concept of more, right? And if somebody told me 10 years ago that I would be where I am today, I would have been like, man, you're done, right? You're done, man, you made it, whatever. Meanwhile, I'm like, man, so much more to do.
Have you ever heard the term hedonic treadmill?
I don't think so. Tell me about it.
Yeah, that's what you're talking about. It's the no matter where you're at, you want more. Like,
yeah.
So I learned this in the gym. I went to the gym. I started powerlifting. It's like, I just need to get to 315 pounds. Get to 315. Guess what? 405 or you're a sucker. Get to 405. It's like 500, 400 is for girls, 500 is for men. You get to 500, you're like, guess what? Not a man yet. Right. Oh, and then you find out after a while, you start to figure out like, it's not a disorder, but it is a human condition. And some people definitely suffer from it more than others. Addicts suffer from it more than other people. And then people who have generally intense personalities or get passionate about things. These are all good traits. It's a manageable, it's like, get addicted to the healthy.
I don't know any intense Marines though. I don't know any.
Yeah. Right. Yeah. On a treadmill, that's a known difficult human condition. Yes.
Yeah. I like that you mentioned bringing in somebody who's a subject matter expert to the splitting things out. So I mentioned that we're splitting this deal 3 ways. It's 3 assets, 2 apartments, 1 hotel. One of the 3 people I'm bringing in owns a hotel 40 minutes south. And I was like, bro, this is not my realm. You look at this deal. You tell me if you want. Like, I had him look at it with my property manager, and he called me. I was like, I want in. Like, okay, cool. All right, we'll take it then. Like, I'm not touching this thing if you're not in, because I don't know the first thing about running a hotel. So, but the numbers on it are good. So I'm like, all right, well, hey, if this guy's got one and we've got bank financing at good terms, I mean, I guess in a weird way, this is probably about the best timing to buy a hotel, because I feel like we're kind of coming out of the worst time.
David, I think it's brilliant, man. If anybody's on the call that is like got a hotel deal, limited service hospitality, and they're looking for a business partner or just money or help syndicating, give me a ring. I've been looking for a hotel for like 6 months now. And so, yes, to the extent that, you want my approval, you don't need it, is I think that, listen, I've always been, this is another great topic, actually. I've always been a contrarian. And,
get Alex started.
And what they say about, real estate is true. It's not how you sell it, it's how you buy it. Right. And so, and I know what I'm going to say next is sacrilegious to a lot of listeners, but listen, multifamily scares the shit out of me right now. Okay. It just scares the bejesus out of me. Why? Because it's priced to perfection, and it has been. Okay. I stopped buying multifamily, I think, in 2016. Okay. I own 13 communities, with partners, right? Thousands of doors. And we have our last community under contract. And I can't wait to get at it, honestly. And so 3 years ago, when I made a shift to, flex industrial, and now, over the last year bought, wait a second, don't, people are going to have come at me with pitchforks and torches and crosses, buying office. Oh, office will never come back. That's exactly what I want to hear. I want people to tell me I'm crazy, because every time somebody's telling me I'm crazy, I'm like, I'm going to go buy more.
I like it.
The multifamily part, I think it's a function of, if you're a guy like me, I look at it and say, multifamily is probably a little risky right now. Real estate's been overpriced for 3 years, like you said, 4 years for sure. But with the interest rate's low, and they're going to hang low for a reasonable amount of the future, and the inflation is coming, I think it's a somewhat safe bet, although an overall risk. So I think it turns out to, if you're a young fellow who's trying to get started and learn, there's a lot more upside that's worth the risk. If you've been doing it a while and you're like, dude, I need to preserve my capital, I need to make less risky bets, and I don't have the learning curve to buy I'm buying risk to learn, because the learning is going to carry me, even if I get burned, during a correction, the learning is going to carry me for the next 60 years. So I understand that position where you're like, hey, look, it's just risky and you don't need to take the risk, but some people, we do.
Yeah. Oh yeah. I totally get that. And I do. And I would say my corollary to that, because I'm not totally against it, it's finance it right. Okay. Get your money out long, right? And fixed, and have a buffer, right? Just be able to ride out the next downturn, because there's always a downturn, right? The world moves, the universe moves in cycles, right? The tides, night and day, the moon, waxes and wanes, seasons. So the universe operates in cycles, and business cycles are just part of, the universe. So just expect it, but, have a reserve, fix your interest rate, just do those smart things.
I got a Freddie Mac loan with an assumable mortgage.
Yeah. And how long is that fixed for?
10
years. Yeah. And when did you get it?
December.
Yeah. So you're good. You'll listen. And I say all of that because I agree with the other parts that you say. Inflation is here. Inflation is here. Anybody try to buy a sheet of plywood, right? Recently,
like $70.
I mean, is it gold plated? I mean, does it nail itself to your house for you? I mean, what? It's crazy, right? And look at gasoline. What has happened with gasoline? What's happened to things of that nature? So inflation is here. I talked, I think, previously about M1 money supply. If you just pull that up, that measures the velocity of money in the economy. Not to make this an econ class, but it's very simple, that the velocity of money, which measures really the vibrancy of an economy, the health of economy, peaked in 2007. It plummeted until 2016, had a bump during the Trump administration, fell, put in a new low during COVID, and is now coming back up. But it's coming back up with trillions, trillions, and trillions of more dollars in the system. You're talking about unleashing massive, massive inflation. So get long assets, but finance them smartly. Structure the financing so you don't lose the damn thing.
I almost don't want to say this because it might not go through, but the financing we have a meeting with a president of a bank on Monday. The guy who's financed all these deals, it's a small town. And so the president of the bank who's already lent on them really wants to pull us in, talk to us, and see if he can beat the terms that we found somewhere else. The second bank we talked to, the terms he threw at us was 30-year AM. It's floating. It's not fixed, but with a 6% ceiling, no balloon. I'm like, I'll take 30-year no balloon. Okay. Like six is high. It's not the end of the world. And if we're starting at 3.8, 3.85, I will take a 30-year no balloon on anything right now. If you're going to give me that on $2-3 million.
Amen. Listen, that's really smart to see it. Most people are too naive and they just look at, oh, well, this is a lower rate. Yeah, but it's a lower rate that's going to reset in 2 years or 5 years or 7 years. It's like, I'd rather, you will never see, we've already seen the bottom in interest rates. They're not coming back. We've already seen it. It's bottomed. We're going up from here. And so hold on to your hat. Get long and fix your interest rates to the greatest extent possible. So
I want to, if we can, shift gears a little bit here, Bill. We haven't actually touched on it yet. Can you give a brief overview on LocalVest? Right, like I'm Dave,
Sure.
the guy who wants to get into real estate. Tell me what. So I went and cruised your website, right? And it's simple. I like it. It told me what I needed to know. But from you, what if I'm Dave, the new guy, and I'm like, oh, what's this? What should I expect if I go check out LocalVest? What do you guys offer? What do you guys? I guess what's in it for me?
Yeah, what's in it for you? Well, I guess, it's a marketplace, really. I mean, there's no transactions that occur there, but in the broadest sense, it's a marketplace where there's investors who are buyers and there's issuers of securities who are, real estate guys and gals and, venture-backed companies and funds that are issuers of securities, and they're the sellers, right? They're looking for investment capital. And so at the 30,000-foot view, that's really what it is. It's really there to level the playing field because it's so doggone tough to raise money and to know what to do, right? To do it properly, to have a process, to be able to access a network of high net worth investors. I think that the wallet share, the wallet of the investor base on LocalVest, I'm going to do some quick math in my head, I think is like $16 to $20 billion, right? So, if you've got a good deal, you could raise money. And so that's me bringing, my 20 plus years of syndication and capital raising experience together with my passion to help, the military veteran entrepreneur. I said at the beginning of the podcast that, hey, my transition, really sucked, right? It was fraught with unemployment and, 6 figures in credit card debt. And so, it's easy to laugh about it now, but it's, I could remember, eating mac and cheese for a long time and, it really was not fun. So
I still do that.
Yeah. It's
a choice though.
Yeah. It was not my choice. I'd like something other than mac and cheese. But in all seriousness, like losses, like anything, any hardship, you learn from it, and you hope you learn from it, right? And I certainly did. And for over the last 20 years, it's been great. You never stop learning. And so, that's what LocalVest is that I want to make sure that the military veteran entrepreneur who says, hey, listen, I've done a deal, or I want to do a deal, I want to do a third deal. I want them to be able to access the capital. And then I want the investors who are other military veterans primarily, or people just who want to support veteran entrepreneurs. can find these deals, because there is no clearinghouse currently. LocalVest is it. No clearinghouse for, military veteran led companies and real estate projects. So we're the place. We want to continue to grow it. That's what we're up to.
I like it.
Thank you.
Yeah, it's awesome. Like I said, I went and looked at the website. It was simple. It told me what I needed to know. I'm definitely a fan. So I think it's a great opportunity. And I think you're definitely onto something, like Alex said earlier, where, you've done a ton of these deals. And if you're, veterans, obviously not every veteran, but as far as the character traits you're looking for with, integrity and grit, I would say that buying away, there are much more, you've got a much higher propensity for hitting the right mark in those traits with a veteran than you do someone who's never been tested. Not necessarily because, a veteran is inherently going to be that way, but just because they've been through the fire a little bit more, right?
Yeah, listen, they've been, in the crucible, they've been in the fire, they've been tested, right? They've been slapped into the breach, all these sayings, right?
At least survived a drill instructor.
That's right. Listen, whether the military attracts a certain person or the military, produces a certain person, and there's probably, it's both things are true, and to some degree, it just makes me feel good, right? I want to help them. They've given so much, and they've given so much, right? Nobody gets rich in the military, right? I remember, as a second lieutenant, from your military salary, let me put it that way, right? So that's where I was going. Is like
David's not making much money in real estate or the military. Don't let him get you excited.
Oh man, I think I made $17,000 a year, right? And yes, even in 1992, that was not a lot of money. So between my wife, who had a full-time job, and me as a second lieutenant, we were able to buy a property, though, right? And we had a combined income, I think, of like, I don't know, $41,000 a year, but we bought a property, and then we went and bought another property, and we rented it out. And a number of years later, we sold it and, made money. But the military veteran really deserves, a shot. Not everybody wants to go to work for Boeing and General Dynamics and whatever else, right? There's a growing group. I talk to vets every day, and there's such a growing group of people that are just like, I just want to start a company. I have this idea. I want to get into real estate. I want to be financially free. And they just don't know how. Right. And then there's more programs that are in masterminds, which are great, that are teaching the how, but then they're left kind of at the altar with, but now I need money, right? I need to learn how to syndicate. I need to access, a network of people who can write checks or is willing to take the risk on me. And so bringing that whole ecosystem together on a platform like LocalVest, I think could really, turbocharge, for lack of a better term, this movement. And I really think it's a movement that, people are like, maybe I don't want to go work for a Fortune 100 company or something like that. Maybe I want to, be an entrepreneur, and if there's a group that's good at it, even the Small Business Association did a study, and they said that a military veteran has a greater propensity to be an entrepreneur than someone who has a graduate level education.
I like it.
I think, business and entrepreneur, we talked earlier about, it takes a lot of confidence. It just takes the idea that like, hey, I'm not scared of this thing. And somebody said to me on this last deal, they're like 50 units, $3 million, raising $1 million. That's so scary. And I'm like, I've seen way scarier stuff than this. This ain't scary.
Amen, brother. Right.
And so I think to your point about military veterans, it's like, okay, anything where there's no bullets flying, I'm not worried about at all.
I might lose some money, but I'm not going to.
Yeah, I'm fine. So I think that really is it, where it's like, oh,
I
we
guess
can
depending
solve
on where
this.
you buy, you could get shot in the
Yeah.
try to collect the rent.
Yeah. There are some investors who buy stuff that's scarier than anything.
That's why you have partners, right? You have partners.
Yeah.
You should collect the rent.
Oh man. All right. Hey, Bill, we got a couple questions we always ask everyone on every show.
All right, let's do it. I'm now I'm afraid.
No. They're easy. They're Marine Corps level questions. You're good. So the first one I always ask is if a E1, E2 or 18, 19-year-old was to walk up to you and just ask you for like one piece of advice, one thing you wish you'd known when you were 18. What do you think you'd be the one thing you'd have to tell them?
Oh man. I'm just going to go with my gut, and my gut is fear nothing. Fear nothing. Listen, enjoy the ride. It is the things that you think are big deals are not big deals.
I like that. I like that a lot because I mean that's exactly what we're talking about, right? I mean, this deal I'm working right now is going to be the biggest one I've taken down, and I mean, we literally the three of us were sitting down talking, and it finally just came to the end. It was like, if you lost this much money, would you be okay? If you lost this much money, would you be okay? All right, none of us want to lose this money, but like we'd all be okay. What do we have to lose? We're going for it.
That's it. Listen, money is infinite. There would be the second thing I would say. Money is infinite. You make it every day. There is, incredible sums of money out there, and so it's okay to it's account balances go up and down, right? And it's okay. You'll learn something. You'll still survive, right? If you lost that money on that deal, but probably the education you gain from it will be infinitely more valuable to you, and you'll make 10, 20, 100x on that because of the knowledge you gained, and that it's not over. It was just an education. You paid your tuition.
Yeah.
You needed to learn something.
Real estate's very forgiving too. Businesses can be volatile, but real estate's very forgiving overall. And so a lot of times people are like, hey, should I do this deal? And I had a guy the other day, he called me, he was stressed out about this deal. And I'm like, dude, you're going to make 30 grand in this deal. If you really mess it up, you're only going to make 20. Stop. Go sign a check. And actually, he took so long worrying about, he missed the deal.
Yeah.
Because it took too long. But worrying about, I'm like, dude, if you make you're gonna make this tragic, horrible mistake, you're only gonna make 20 grand. If you do well, you could make 30, 35. So like, you're overanalyzing the risk and underappreciating the return.
Yeah,
that's a good point.
All right, question number 2. What is one resource that you would recommend to anybody looking to get started in? Normally I say real estate, but in this case, maybe I'll piggyback it and say real estate or private equity financing. If there's, I don't know if there's a specific resource in that world either.
Yeah, the unfortunate answer is that there aren't any. Right? There's like no resources. It's like it's a total OJT, type of learning. But I guess what I would do if I really wanted to learn about that is I'd get in the hip pocket of somebody who's done it a number of times and has integrity, right? And you just learn, and you're going to pick up stuff. And I think that about education, the thing that's missing in America today is that whole mentor protege or journeyman tradesman type of thing where you follow the person around that's been doing it for a long time. They do it in the trades, right? They do it in plumbing and electrician and carpentry and stuff. And they need to do it in everything, right? And you just kind of shadow somebody, and and I think that's possible.
It's highly specialized. Plumbing. It's like there's the thing about plumbers is they're like, well, everybody has plumbing. Whereas syndication, it's highly specialized. So I totally agree with your point, but I understand why it's like, hey, even if you made a big resource about this, what's your user base for people that would need it?
Yeah, you're right. Maybe that's the reason why that nobody has really codified a program. I started to write a book during COVID, and it's now on the shelf on how to syndicate, creating a course. Maybe I'll dust it off and and start rewriting it. But you're right. It's something that you kind of got to learn from doing, and just expand your network and talk to people who have done deals, and in a mastermind, hey, bring a deal to the table, analyze it, not necessarily, the cap rate and how you capitalized it, but more in terms of, from the time you identified it, how did you take it through the process so that it was a legit syndication?
Yeah. Also, I think it's testament to like people who, if there's no easy education, does that mean you're going to give up? It's like, hey, is there a book for this? No. Well, okay, bye. So it's like, I think in some ways it acts as a little bit of a filter. It's like the internet has all the information that you could possibly want. And like you said, you can find somebody who'll teach you it, and you can get to them from the internet. So interestingly enough, while it would be good if there was a course or something a little more formal, the tools are still at people's fingertips. It's whether or not they want to take the time to diligently go get them, because, I learned this thanks to the internet. People can figure it out.
I think I spend more time on YouTube than my kids, right? So I'm constantly watching videos and podcasts, and I'm listening to them. And so I keep thinking about how jealous I am of people transitioning nowadays. I'm knocking on 52 and years old. And like, man, if I had this at 28 when I was transitioning, I would be filling my mind with all of this information. I'd be listening to all the podcasts, and I would have come up to speed a heck of a lot faster.
Yeah. All right. Last one is, this is a real hard one. Where can people get a hold of you?
Oh, yeah. I thought it was like, what if I was a tree? What kind of tree would I be? But,
We know that route, but
no, maybe not. But how can you get a hold of me? So it's real simple. My first name is Bill. My company is LocalVest. So Bill at LocalVest.com. Shoot me an email. Connect with me on LinkedIn. I think I'm under William. The only person who calls me William is my mother. So please call me Bill. But you can kid with me if you want to call me William too. That's fine. But listen, love to hear from everybody. Seriously, please connect with me on LinkedIn. Share your story. And if you need to grab a couple of minutes with me, I'll shoot you my Calendly, and you get on my calendar, and we'll wrap for a little bit, and tell me a little bit about what you're looking for, and if I can be a resource to any military veteran entrepreneur out there, let me know, and I'll try to make a connection for you.
Awesome. Yeah, and you guys should absolutely take them up on that. Phone calls are great. So I've appreciated your time a couple times now that I've gotten to hear you talk, and you've come and spoke to our mastermind, and it's always a pleasure, Bill. Thank you so much for joining us this evening.
Thank you guys. Listen, this was quite an honor, man. I appreciate it very much.
Thank you for listening to another episode about my journey from military to millionaire. If you liked it, be sure to visit FromMilitaryToMillionaire.com/podcast to subscribe to future podcasts. While you're there, we'd love for you to rate the show, give us a review on iTunes. Now get out there and take action.